Hi and welcome to this video where I'm going to talk about how I am planning to invest £20,000 into my stocks and shares ISA with Trading 212, and it's not specifically how I'm going to invest this year's £20,000 allowance. It is basically I have transferred money across from an old stocks and shares ISA that I held with Vanguard, and that actually took me about 4 or 5 weeks to transfer that money across. So I'm just in that process of, from July onwards, starting to invest that money reasonably slowly. I'm looking at dollar cost averaging into the market just to try and smooth off some of the peaks and troughs that we might see over the next few turbulent months. Let's go and jump in to what have I been up to in Trading 212. I have managed to move money across, and I've been doing a little bit of consolidation. So I moved that £20,000 across, and I'd already invested almost £3,000 into the ISA. So I've used up 19% of my ISA allocation for this year. If you've been watching for a while, you'll have seen that I do have a couple of pies. I just have this ISA 2324, and that's investing into ETFs. On the monthly dividend, I've got IUKD in there as a ETF, and I've also got a number of stocks, and it's about 15 or 16. It keeps moving up and down depending on what is in there, and I am planning on dollar cost averaging into those, as well as for that ISA 2324 ETF pie. I will just continue to keep investing £250, £300 a month, or whatever I can afford to invest into that one. So let's first of all have a quick look and see what we have in this pie. I just have the 4 Vanguard ETFs. So I have one tracking the S&P 500, one tracking the emerging markets, one the FTSE 100, and then the final one, which is VERX, and that is doing the developed Europe less the UK. I've got a rough allocation of what I'm working towards here. I haven't specifically been investing into VUSA, into the US S&P 500 market at the moment. Just really do think it's a little overinflated at the moment. If we have a quick look, it's still up above £66, and if you have a look at where my average price is, I'm coming in at about £62.17, so it's just really too high. I do see it coming down a little bit, because if we have a look at what it's done in the last month, it's gone on an absolute tear up from that £64.5 per stock, and it's just a little bit overpriced for me. So I am just picking price points and sort of dollar cost averaging into those ETFs. Let's have a quick look at so these are predominantly individual stocks, but as I said, I've got IUKD in here. IUKD is the largest holding that I have within this, so I'm looking to have payments coming in monthly. You'll have seen through a number of my videos, and I'll put a link to the Dividend Stock playlist so that you can have a look at some of the ones that I've been reviewing. But looking at IUKD as one of that dividend ETFs that I'm looking at, and IUKD coming in just at a touch over 6% of a trailing dividend yield. That is one of the reasons I quite like that. It gives you that good diversification over 50 different stocks that it holds. Have a look at the video that I've done on IUKD. It is predominantly UK dividend stocks that I have in here, apart from the one which at the moment is Realty Income, known by ticker symbol of O. I'm investing into this because this really is the monthly dividend company, and it pays a nice 5.09% dividend yield on this one. So I just get about £3 per month coming in on Realty Income. I've then got a whole raft of other ones, and what I'm tending to do is look at dividend stocks that are paying at least a 5% dividend yield, and then looking at ensuring that I have diversification across different sectors. I've given different allocations, so I'm splitting that out across a number of other dividend stocks and looking at things like British American Tobacco, Legal & General, Lloyds, Rio, primary health properties, and some of these are quarterly paying dividends, which means that I can spread this out nicely across the year, slightly better balance across the year, instead of, if you've looked at the previous video where I get peaks in March, June, September, December. I'm trying to get dividend payments coming in, and first target that I'm looking at is an average of £100 would be a nice figure to aim for, a nice round £100 average per month, giving me an annual total of £1,200. And I think through the DCAing into this account, I will be able to achieve that. Looking at IGG and ICP coming in as sort of the diversified financials into this portfolio. I do have Vanguard Developed World in here. I made a bit of a mistake and bought VEVE instead of VERX, which I was looking to put into the other fund, but it's only a couple of stocks in there and they pay a dividend, so that's okay. And having recently done a bit of a video on 3 different stocks that would pay me across the whole year, I've actually decided to invest into GSK to give me that sort of earlier in the year, sort of hitting that January payments. I've then looked at a couple of the sustainable energy companies, so looking at Trig and Greencoat, UK Wind, just breaking those up, just give me a little bit of diversification across that sector. And then looking at, I don't know whether I'm going to invest any more into Vodafone. I've done a video on that. I'll let you go and have a quick look and see what you guys think of Vodafone. Is it just at a price? Can it go any lower? It just seems to want to keep dropping down. There's a little bit of bounce back, but over the last year that's not looking particularly great. It's certainly a downward trend, and I'm not sure whether or not that dividend yield of over 10% is really going to be sustainable. We'll wait and see. There might be a merger coming up in the future which might actually provide a little bit of security and stability to the stock price, but let's wait and see what happens. That's sort of what I'm looking at on that side of the house, and sort of how I'm looking at investing that £20,000. I'm looking at DCAing in, and if you watch some of the dividend stocks, you'll see that there are certain dates that I'm aiming for. There are those ex-dividend dates for companies, so there is no massive rush to go in and just buy everything now. What I'm doing is planning how I'm going to be buying in over the next 6 months or so to invest that £20,000, and I think that is a good way of doing it, so that I don't end up buying as the market potentially cools off a little bit, which it potentially could do with the increase in the Bank of England base rate and some of the concerns that we might get some form of recession. If you're looking at what's going on in America, who would even think that anybody's thinking of a recession coming into place? But it's always a good idea to keep some money for those opportunities to buy in when things are getting cheaper, and that's what I'm planning on doing, buying as things become a little bit cheaper, and that's what I've been doing over the last week or so. Why don't you have a look at this video that looks at some dividend ETFs that you could potentially invest into? Thanks very much for watching. I'll see you in the next one. Bye.